There does seem to be a genuine mindset shift underway. People are really questioning that long run assumption of 6 to 7% capital growth year after year.
Kia ora, and welcome to the New Zealand Property Market Podcast, brought to you by Cotality for the 15th of June 2026. I'm Head of Research at Goodall, and today I'm joined, as usual, by our Chief Economist, Kelvin Davidson. Kelvin, a bit of a quieter week on the data front, particularly for the external economic data, but certainly, as per usual, no shortage of things to talk about, and that's before we even consider all the sport going on, mate, but we'll leave that for later. So let's get into it by covering off the Mapping the Market release, which you took to market last week. I think we'll generally keep it pretty brief. Story's not too different, or, I don't want to say not interesting, but certainly pretty consistent with previous conversations. So yeah, over to you to take away, mate.
Yeah, more of the same. I try not to use that phrase, but it pretty much is at the moment. Still pretty patchy across the country. I mean, we're seeing that in the district level figures, city level, TA. So of course you'd also expect it at the suburb level, because of course those TAs are built up from individual suburbs and individual properties. So of course they should both go up and down. So still fairly patchy. I guess regional parts of the South Island, Canterbury, Southland, the West Coast, the suburbs that have shown a bit of growth in the last sort of year do tend to feature in those regions, parts of Invercargill. So as opposed to parts of Auckland, parts of Wellington, where the overall market there is a bit softer. So no surprise that some of those suburbs feature, I guess, in terms of the lists of markets that are still falling. So yeah, it's still patchy. That's whether you look at, I suppose the thing about these figures are they're split by house and townhouse, so we can get into that more granular sort of analysis that we touched on last week at a higher level. It's similar messages. I mean, there's weakness in Auckland and Wellington for houses, there's weakness for townhouses, strength for those two property types in other parts of the country. So yeah, there's probably not a lot to be said. It's still pretty patchy, just reflecting the uncertainty out there, higher mortgage rates. Yes, there's farming going okay, services sector sort of battling a little bit, so that's, I think, feeding into some of these figures. But generally, it's still just patchy, I guess, is the overall summary.
Yeah, I think patchy is the word for it. As you said, there's some up, there's some down, but ultimately the market's pretty flat at the moment. Yeah, I think the good thing with this, right, it's localized, it's granular. People are going to pick out different things. So I suppose all I can do is plug the map itself. So even if you just Google Cotality Mapping the Market, you'll arrive at it. You can scroll to anywhere in the country, or you go to the website and you'll see the release that you wrote off the back of it as well. So yeah, go and check that out. Go and see the detail for your area, and as per usual, let us know if you've got any questions or any thoughts as to why you might be seeing differences in your local area. But yeah, we might just leave that one there. I thought we could spend a bit more time looking at the buyer classification data. We did get an update for May's data at the end of last week. And I think the main thing that jumped out to me for this data was that mortgaged investors really had a bit of a firm step back from the market for Q2. Now we obviously track the monthly data, but when we publish and the data we generally push externally, it's quarterly. So we've got 2 months of the 3 months for Q2, and you can see this like pretty significant enough, I suppose, turn back down again. So in Q2 so far, 22.4% of sales went to mortgaged investors. It was 23.5% in Q1. So, that's a whole percentage point lower. It was 24.3%, so almost another percentage point higher again in Q4 last year. And this is after we'd seen some growth in the share of sales going to this group, a bit of a plateau probably towards the end of last year. I'd sort of been talking about it flattening out, but now I think we've seen this sort of drop down for 2 quarters. It does look like that investor cautiousness, I suppose, is really real. I think we've been hearing about this. We knew they were mindful of potential change and just how much the squeeze has been on their costs, and obviously lots of rental supply out there. The yield's not exactly great. Expectation on capital growth has been reduced over a large period of time. So it does kind of stack up to me that this data is reflecting that. So that's the high level data for the nationwide investors, and I think that's the thing that jumped out the most, although it's worth acknowledging first home buyers we're up to 28.5%. Now, this is a record quarter for first home buyers, of course, acknowledging it's not complete. So if June sees their activity drop below, it might drag the overall quarterly figure below the previous record. But for now, it looks like we could see yet another record for first home buyer activity, which is, just amazing when we, talk about how, there is pressure on this market and there's uncertainty. First home buyers continue to find that way. And I don't think there's any major story or anything new here. It is they're accessing their KiwiSaver funds. They use those high LVR allowances to get into the market. They're exiting an expensive rental market. All of this stuff remains true, right? So no major story necessarily in there, but just a continuation of that. Meanwhile, those movers just hovering around at 26%, relatively low for their long-term history. We've seen some volatility over the last couple of years, but generally we're seeing them much more restrained than in previous years. And still, I think there's likelihood of some pent-up demand coming from this group, but they're not going to come back out until they see some growth in the economy and more certainty in the job market. So I suppose, again, it's a continuation of things we've spoken about, but maybe that mover's holding flat, those investors dialing back from the market, just shows how difficult it is out there and how it's hard to make the finances work right now for them. And it's certainly interesting when we're coming into this, more uncertainty. I saw another poll was released today from from a government perspective, politics perspective, and it looks again like Nationals' support is reducing. So the more it looks like it's an open election and there's more chance of a change in government, the more I think investors will continue to be a little bit more wary about firing too much into this market. So those are the overall nationwide figures, Kelvin. I don't know if there's anything you want to cover off from a broader perspective. Otherwise, I did make some notes on the sort of other main centres we don't often talk about outside of Auckland, Wellington, Christchurch. But yeah, any thoughts first before I jump into some of those other main centres?
I think just, the mortgage multiple property owner line stood out to me as well. And I guess one thing is when we present the charts or talk about buyer classification, we tend to talk about market shares. So, it should always add up to 100%, hopefully. But keep in mind that drop off for mortgaged MPOs in terms of their market share is I guess taking place in a wider market that's softening itself. So the number of deals overall we know that's weakened over the first sort of 4 or 5 months of the year. So it does look either way you cut it for investors, they do seem to have just sort of pulled back a little bit. And for all those factors you're talking about, that they're all correct. And just add I guess a sort of mindset shift as well. The events I go to, and it's all very easy for people to say, oh, this time is different. When house prices are flat, it's very easy for investors at these events to say, oh, well, they're always going to be flat. You kind of extrapolate what we've just seen, and maybe they change their tune if and when things do start to rise again at some point in the future. But so I'm conscious of saying this time is different, but there does seem to be a genuine mindset shift underway. People are really questioning that long run assumption of 6 to 7% capital growth year after year. So that's feeding into it as well. And I suppose obviously the election is going to be on some people's minds too, around capital gains tax and what other potential tax changes might be made if we saw a change of government. So it's definitely one to watch. It does seem to have been a shift underway for investors, which probably isn't entirely unsurprising with all those challenges that group is facing. But it's quite striking to see.
Yeah, for sure. And I think without labouring the point, because I think we did it to death last week, why would an Australian investor look to invest here when the New Zealand investors can't even make it work? I just just provides further, I think, evidence that, it's not an easy market to make it work. It's not that attractive for local investors. I can't see how someone from overseas is going to look at it all that fondly either, unless it's somewhere to park your money, but you're certainly not going to be expecting much growth. So, saving on capital gains tax isn't going to help you too much either. But I won't labour that point. Going into some of the detail though, and maybe I'll just go through each of these three. So Hamilton, Tauranga and Dunedin. I might just do each one and then see if you've got any thoughts on them. But Hamilton, worth noting that 31% of sales so far in Q2 gone to first home buyers. It is down on recent quarters, but still relatively high in the long scheme of things. Multiple property owners with those mortgages are pretty consistent at 29%. We've seen movers bounce back on recent lows. So, maybe those movers are finding a bit of value in the Hamilton market, but they are still only 23%, so below long-term averages. So it's not like we're seeing confidence, hugely jump back in that Hamilton market for those movers either. They've been pretty restrained. Have you looked at this data? Do you have any thoughts on Hamilton? Any anecdotes of people who live there, or often people talk about the Aucklanders and Hamilton market? Any thoughts on that?
Not a huge amount. I mean, it's always going to have some affordability, more favourable affordability potentially compared to obviously Auckland, for example, lower house prices. I mean, it might not necessarily make it easier for locals, but I suppose lower house prices, and it's got all of that surrounding infrastructure and roading and the farming economy and stuff. So yeah, all factors to feed into it, but yeah, ticking along.
I'm sure it was a good weekend to be there. Just gone. They had field days, of course, just down the road, and the Chiefs with an incredible game over the Crusaders. But I'll save that chat for later. But yeah, certainly some positivity from a sports perspective and the agricultural perspective, as you said. Moving on then to Tauranga, I did see, this is a pretty strong movers market. They are doing okay at sort of 33%, which, if you think back to some of the conversations so far today, that's higher than most other areas. And we know it's a strong mover market, either from out of the region or from inside the region. It is down from, some of the peaks they've had, but maybe not all that bad in a longer term context. And maybe as a reflection of, those high equity owners can still make that move to the region. So I guess those people that might have owned a property elsewhere, particularly Auckland, seen that build up in equity over time, you can still be active in that Tauranga market. So again, probably just talking to the ageing population we've got, and Tauranga remaining a pretty strong, attractive destination for people that are getting to that retirement age or in a retirement age. What was I think really interesting from this chart was seeing first home buyers actually starting to make their presence felt there. They're up to 25% in Tauranga. And, I know that that's been an area where I've always said first home buyers aren't very active here. The long-term range might be 15 to 20% at best. So, first home buyers are seeing that as in a pretty attractive market. I think job creation's been pretty decent in Tauranga for over a longer period of time. I know there's been lots of development across the broader Bay of Plenty region, so maybe that's also attracted people to the area. I think that's maybe one of the factors that's led to first home buyers finding some value there. And, maybe we are seeing a changing demographic, maybe not quickly, because we know it's a relatively high average age in the Tauranga area, but maybe there is going to be some regeneration of people finding the option to live there, maybe still the opportunity to live there and hold your job, which might be centred in Auckland, and you can go there every now and then, but you can still do it from home in a beautiful place like Tauranga. Maybe that's sort of weighing on this as well. And then just finally on the property owners, mortgaged, of course, they're at sort of 20%, so pretty low, below COVID and even pre-COVID peaks of up around 29%. So, the investor market there seems to be a little bit less attractive or contained. I do wonder about, yield probably isn't that strong. They're highish average prices. I'm sure there's, decent level of demand for rental property. There's a university there, of course. So, there could be some opportunity there, but yeah, I'd say just general high values mean it's pretty hard to make those numbers stack up in that Tauranga region. Yeah, any thoughts on that? I don't know if you've got any thoughts on the economic situation across that Tauranga and Bay of Plenty area that might support the activity that's going on there.
Yeah, I mean, it's you wouldn't necessarily think of the main cities there as being sort of supported by dairy farming or horticulture or kiwi fruit or whatever, but it's that sort of idea of the surrounding areas and that puts a bit more cash into the region and that flows into the towns and cities. So yeah, there's probably a bit of that going on. I probably just add one thing around the market share numbers again. I mean, of course, they've always got to add up to 100%. So if the first home buyers have strengthened, someone else had to have weakened, and that's been, mortgage investors. But I think it's probably more than that. It does feel like there's actually, it's not so much that it's a mathematical thing. You probably have seen a genuine sort of pullback from investors, and first home buyers are finding more opportunities. With a bit less competition, their affordability is a bit better. House prices have come down, still expensive. Not saying it's easy, but there's a bit more of a gap there, I guess, for first home buyers. So it's probably the only thing I'd add.
Yep. No, I like it. Good call. Dunedin then. First home buyers long term trend is up, but has been dropping recently. So the last couple of quarters, it was sort of 30% at the end of last year to only 26% so far this quarter. So maybe a bit of first home buyer fatigue in that market, maybe. Movers have sort of ticked along at about 29%, whereas those property owners with a mortgage have swung a lot over the last 10 years. You look at this on a chart and it just goes up and down over that period of time. Still pretty contained, I'd say, at around about 22% so far this quarter, but that is up on a recent low of 14%. So again, and that was at the end of 2023. So the market's improved from investors' perspective in the last couple of years, but actually, they're still pretty low in a long-term context as well. And I did wonder, was there something that low was probably when those tax settings were more difficult, couldn't write off your interest costs, longer-term bright line tests. We know there's a strong investor market for, of course, student accommodation. And so I'm sure those guys relied on that cash flow, and that would have affected their investment back then. Now that's back, maybe they improved, but again, maybe reflective of that New Zealand figure, we've seen those investors start to pull back a bit more now when it's pretty hard to make those finances work. And again, pretty old stock, and so you're having to improve it. That's costing you more. I'm sure that's weighing on those investor minds as well. So yeah, obviously it's another interesting market. From all three of these, right, they're quite unique in their own right. Dunedin, strong university market. We know Tauranga, that older age population. Hamilton, definite attractiveness to being close to Auckland with the improved road there as well. I'm sure that means that people are more willing and able to make that commute and or own investment property out of Auckland, for example. So I think there's different factors that are affecting these markets, right? Which is why it's always so interesting to jump into it. Any personal experience of Dunedin? You mentioned prior to us recording actually that you've got a trip down to Dunedin planned in the next few weeks. I'm sure you'll learn more when you're down there. But yeah, any thoughts on Dunedin before we check out the external migration data?
Yeah, I was just sort of thinking back to the last time I was in Dunedin for the Property Investors Association, and yeah, the chat at the time was very much about cash flow had been hit, and so for mortgage investors, yeah, maybe yield is really important in Dunedin. Perhaps investors in other parts of the country might be looking for capital gain. What's that balance of where they get their return from? But yeah, the people I was speaking to certainly were like, student accommodation. It's about cash flow, getting their rent in. So yeah, anything that's going to increase your tax bill and reduce that cash flow is going to be problematic, and that did seem to be a concern for those guys. But yeah, deductibility's back to 100% now. I suppose that would help to improve that bit of an increase in the MPO share that we've seen. But yeah, they'll definitely be keeping an eye on that. I've heard a few anecdotes here and there in the past sort of month or two about Dunedin maybe being targeted again by investors on a yield basis. The yields still have they always look pretty good compared to other parts of the country. You might have higher costs, so your net yield works out the same maybe, but certainly on a gross yield perspective, people just starting to think about Dunedin again. Looks pretty decent, and you've always got that base of student accommodation. So yeah, but that feedback's probably almost pushing a year old, so things might have changed since then. So we'll see the update in a couple of weeks' time.
Yeah, I'd be really interested to hear how that goes because, yeah, I do think that, like you say, it looks attractive on a gross yield perspective, but if you've got this older stock, maybe the fact that difference between gross and net now has widened, I'm expecting, maybe that is something that's starting to weigh on that activity. But yeah, maybe we can report back on that once you've had the boots on the ground and had some yarns to the locals there about what's going on and what's driving their activity or lack of in that market. But that's all good, mate. Well, yeah, worthwhile conversation, I guess, and certainly for anyone from those cities, if you have got a bit more experience and thoughts on what's going on in your area, please do let us know. And you can get in touch with us via email. You can comment directly on the podcast player you're listening through right now. Do feel free to get in touch, and I'd be keen to include that in any future commentary or answer any questions you might have as well. I was going to plug any other area and say if you want us to talk about your area, maybe you can let us know, but that might get us a lot of work. So we'll see if it does come through and how many there are. We might be able to include those in future, but obviously always keen to draw on that unique and great level of insight we can get from that buyer classification data. So for listeners, please do let us know. But otherwise, mate, the external macroeconomic data that was released last week, the only real one that was of note that we haven't talked about for a while is the net migration data from Stats New Zealand. Do you want to take us through the data and I guess any interpretation from that and what it might mean for the market and the future of migration too, I guess?
Yeah, we had net migration in the year to April was around 23,000, 22,800. So that's up pretty strongly from what looks. Now the figures can be revised, so you're not 100% sure, but it looks like the trough was August last year of around 10,400. So it's been a pretty solid increase over that past sort of 7 to 8 months. Now it's been driven by, this is a net balance, of course, so it's been driven by You can have lots of different swing factors in there, but more or less we've seen increased arrivals of, I guess, new people to New Zealand, non-citizens, and we've seen slightly reduced departures of current residents. So Kiwis heading overseas for whatever reason. The shifts haven't been massive in either direction, but it's been enough to add up to that overall increase. So yeah, the trend is up. But I guess it's still relatively low. It depends when you take your average, but I just go way back as far as I can. And so the average, if you go all the way back, is about 30,000 in terms of net migration to the country. So about 23,000 now is, yeah, it's better than it was, but it's still below normal. So I think probably what it adds up to is it's ticking along. Yeah, it's contributing a little bit to our population, but we've still got new housing supply as well. So it's kind of like yes, the demand's growing, but so is supply, and it still seems to be that kind of balance there. I think so. Yeah, in terms of rents right now, I mean rents are pretty flat, if not falling in some parts of the country. We're starting from that pretty subdued position for the rental market. There's good level of choice out there. So even though net migration's risen, it's hard to see rents spiking anytime soon. We're probably more in this holding pattern where migration ticks along. Rents kind of flat line. There's this decent balance between demand and supply. So I think that's probably where we sit. Yes, net migration can shift up and down. We've seen the history over, well, the past 5 or 6 years. Obviously, it can be pretty volatile, but just right now, we kind of seem to be in this holding pattern. It's trending slightly higher, but certainly nothing that's going to cause rents to spike for the foreseeable. I suspect.
Yep. Yep. No, I don't think I have too much to add there. I suppose I can just use that to lead us into a conversation about economic growth. We know that, in the past we have been pretty reliant on strong population growth, often through migrants, for our economic growth. We do have GDP data for Q1 coming out this week. Now, of course, it does feel like old, but very important news. Like, we need that line in the sand, I think, for where things were at in Q1. I don't know what you wanted to say about this one. I guess we're expecting some level of growth, maybe 0.5 to 1% growth in GDP over the quarter itself. But and I know we've got a few really interesting releases coming up this week that are a bit more timely from an economic and inflation perspective as well. So maybe those are the things we're going to watch out for. And I think, especially when it comes to what are we seeing, or what are we getting a feel for second round impacts of inflation, and that selected price indices data. We'll talk about this next week, but I don't know whether you want to just give us a quick economic overview, what you think about this GDP release, where it might land, and then maybe you can preview the more recent data we're expecting to see and what we'll be talking about next week.
Yeah, there seems to be a consensus around about that 1% increase for GDP in the first quarter, so January, February, March, in terms of quarterly growth from the final 3 months of last year. So a 1% increase, more or less, pretty solid number. You definitely take that any kind of day of the week. But of course, I mean, it's always old, but it's even older. And in this current market we've been in, because of course we know what's happened over sort of April, May, and into Q2. So yeah, I mean, it'll get headlines, of course, and it might have slight implications for the Reserve Bank, maybe in terms of where the economy was starting from, and in terms of spare capacity or actual growth versus potential growth, and how much spare capacity there might be. A stronger GDP number at the margins might lead them to an earlier OCR increase if they think that has eaten up spare capacity a little bit more. Maybe there's some more inflationary pressure, but I don't think it's going to be a game changer. I mean, it would have to be a shocking, not shocking necessarily, but a really surprising result away from that 1% figure to really change things. So I think people will move on pretty quickly. And yeah, probably the greater interest this week will be on those selected price indexes figures, which is due Tuesday. That's pushing half of the CPI. It's released monthly. Yes, it's the more volatile components, but people will definitely be looking at food prices. Obviously, fuel prices are in there. So yeah, so I suspect those inflation figures on Tuesday will get more interest this week, but certainly looking for GDP later in the week too. And yeah, as I say, I mean, in terms of the Reserve Bank's decision, which of those indicators will have a bigger influence, you'd have to think it would be the selected price indexes figures rather than GDP. But it's always a biggie. Everyone loves the GDP numbers, so it'll get interest. But yeah, if anything, maybe a little bit even more dated than normal.
Yeah, exactly. I think, yeah, like I said, there'll be an acknowledgement of it, but there's some decent data now coming out more quickly and more recently that'll tell us about what's happening in April and May. And I think there'll be close attention. I think the Reserve Bank have shown that they really do pay more attention to those things. But of course, it's official data. There's going to be coverage of it. There'll be some detail, obviously, behind it, right, as to what has been affected most. And maybe even with that, at least having 1 month of the affected time from the Strait of Hormuz being shut at the end of Feb, start of March, there's be some impact from that. But obviously, we're really going to wait for April, May, even June data to get a really good feel of the true impact to the economy. So, yeah, we'll wait and see for that one. All good, mate. Well, the other thing was just obviously our chat last week where we answered Matthew's question around, the potential glut of townhouses. Actually being received really well across the board from people I've spoken to that have listened to that and love the extra detail. There was an extra comment on Spotify saying it was a great episode. So I think that you did a great job to cover that off, mate. Matthew himself did follow up with another email, which was great to hear. So thanks, Matthew, for following up. He did say, this was very insightful and has altered my perception of the situation. Learning's what it's all about. So, yeah, totally agree, right? We've got as much information as we can. We gather whatever we can and try and bring some reality or some new information to the conversation and then tease that out for what it might mean. So yeah, thank you very much for that follow up. He did say he's got another question and didn't want to hog them all, but he did want to ask about he was curious about our thoughts on the slowdown happening and forecast across the ditch in Australia. How might Australia and New Zealand's diverging fortunes affect us as the smaller country? Kelvin, I don't know if you got any pretty brief thoughts on this one. I don't want to do it to too much detail today. I think it's a great chance for us to do another good Trans-Tasman pod with our colleagues across the ditch there in Australia. And we obviously were hanging out with them last week, and so we've got a decent feel for what's happening in Australia. But worthwhile probably getting Director of Research Tim Lawless on the podcast at some stage in the next few weeks, so we can go into a lot greater detail comparing the two countries. Data, fortunes, expectations. But any quick thoughts on this one before we move on and sort of have a bit more of a personal and sporty chat for the week?
Yeah, I think in very, very quick terms, I don't think there's necessarily any reason why, if there's a big sort of slowdown in Australia, either economically or in the property market. I mean, keep in mind they don't really tend to have them very much. It's not the lucky country for no reason. So they don't tend to come along very often. But also, if and when it does, I don't think there's really any reason to think that'll just automatically drag us down as well. There's different things going on in each country, and yeah, there's some kind of correlation in GDP growth historically, but there's been plenty of times when our two economies have diverged. I mean, even just look at the last couple of years. So I don't think necessarily a slowdown in Australia, if it arrives, will necessarily drag us down. We seem to be at different points in the cycle. And also, I mean, think about there's migration flows. We were just talking about that. There's a pretty clear sort of perception or even reality that a big driver of our net migration is the relative position of our labour market. So in other words, if Australia's labour market weakens while ours strengthens, that tends to boost our net migration and effectively, bring people home. All those people who might have been living in Australia maybe might find themselves out of work. Instead, they go, you know what, New Zealand's looking a bit better now. I'll head home, and more people stay here than otherwise they might have left. So, I think it could actually be sort of positive in the sense that lifts our net migration, lifts that spending side of things. Yes, there could be house price pressures as well, but just at the moment, we don't seem to be in an environment where that's necessarily a concern. We've got new supply coming through still, so yep, you add a few more people to the population, but supply is kind of there to match it. So. Yeah, I think. I mean, the short answer is I don't think it necessarily is one for one. If Australia weakens either in the economy or the property market, I don't think it necessarily is guaranteed that that'll happen here. There's different influences, and it could be actually good for our economy in the sense if we can get some more people in, skilled labour, that sort of thing. So, yeah, we can look at it in more detail, but that would be a quick answer anyway.
Yeah, I think that's good. And I think from a property market perspective over there, our team in Australia are saying that, yeah, there's no doubt there's going to be reduced demand for existing properties because there's less tax benefits, right? So there's going to be less growth in their housing market off the back of that. There's no doubt about it. But they're not exactly forecasting significant falls across the country or across their capital cities or anything either. So, yeah, of course, there's weaker demand and less growth. Maybe it does, travel sideways. Maybe they see something what we've seen the last few years. They see that, they experience that a bit more. They've also got some big differences across the capital cities, right? I think there's much greater strength in the likes of Perth, not so much in those larger, more expensive cities in Australia too. So maybe they just see a continuation of that, and it'll be affected by those local economies who, can support the growth and are still attractive for people to go and move to. So yeah, there's not going to be one rule or one statistic or one change in trend to rule them all either. There'll be some difference across their states and cities as well. So yeah, I think it's a good opportunity to go into a bit more detail, do a specific pod about it. There'll be plenty of people that'll be interested in Australia on its own and the comparison between the two countries. So keep an eye out for that one. We'll look to schedule it the next few weeks, and we can go into that in a great amount of detail soon. Cool, mate. Well, that's pretty much us for today. I think the other thing to mention is that I am recording a podcast this week with a loan market advisor based up in Whangarei, actually. So it'd be good to hear what's happening in that Northland market. So again, another one to keep an ear out for later this week. If you've got your podcast downloader set to automatic, then it will just drop straight into your podcast players. So it's a good reminder to make sure you're actually following the show. Do put that auto download on so that'll come straight in. You can hear about what's going on in that local market. But yeah, otherwise that's pretty much us for property and economics today, mate. Now, as I said at the start, there's plenty to talk about from a personal and sporting perspective, probably too much. So I'm going to leave out the FIFA World Cup so far. It's only early days. Some great games, a couple of upsets, well done to the Aussies. But good luck to the All Whites tomorrow. So let's just focus on the rugby, from my perspective anyway. Obviously, got to talk about the Hurricanes. We've got the upcoming final this week. Really looking forward to it. Should be an incredible game. Certainly less one-sided than the two semi-finals were. And not that we expected that of the Friday game, the Chiefs, really hammering those Crusaders. Didn't expect that one to happen, but yeah, pretty impressive from the Chiefs, and definitely sets up this week's game. But I've got to say, from the Hurricanes perspective, just got to say what a great product the whole event's been to all the games I've been to, right? Like being there, they've got great halftime entertainment. That's to go with the quality on field. And yep, this one was a bit of an arm wrestle for, the first half, but then the Canes came good in that second half. Kind of the opposite to how that Chiefs and Crusaders game went. Too many teams starting with C's. But yes, hoping and expecting the cake tin to be full this week. So, if you're in Wellington and you haven't been, or you have been, please make sure you get a ticket and go and enjoy it. If we've got a sellout for a Super Rugby final, I think that'll be pretty impressive. So I expect it to be go close. I think we're 24,000. So, was that 2/3 full? Not bad. But let's go again with the final. But yeah, pretty exciting. And come on, the Canes. Very excited for that one. Yeah, I don't know. Any thoughts on the rugby and other sport thoughts, mate?
Yeah, I just wondering, you might get some cowbells in the stadium on
True.
Saturday night. I think that, although they're not allowed, are they, or something? I remember a while ago. But anyway, yeah, there'll be some Chiefs supporters coming down the road, no doubt. So that might help fill it up. And yeah, I mean, it's got the potential for a pretty exciting final. You hope they just don't go into their shell, being a final. You hope both teams got good forwards, attacking backs. So it could be a cracker, provided that, I guess, the weather holds up, and also maybe they don't sort of go back into their shell with that finals pressure. But yeah, both teams are humming. We watched the Chiefs Crusaders game, together on Friday night. There, it was. Yeah, I mean, what a first half. You wouldn't have expected that. So, yeah, who knows? Maybe DMAC, does he hold the key? We'll see. And yeah, I mean, the other thing, Kane Williamson retiring from a cricket perspective, and
Yes.
that's a biggie. I mean, just like him, it's kind of flowing under the radar a little bit. People have just gone, yep, that's just Kane. That's the way it is, and I suppose we move on. But leaves a pretty big hole. I know he's been out of kind of the shorter forms of cricket for a while, but that's a big hole in the Test team. So shame about that, but great player, and yeah, we'll thank him for the memories, I guess.
Yeah, great call, and yeah, I think I'm still relatively in denial, which is why it wasn't top of my mind. But there's been some great coverage since he made the announcement about just the impact of his career. Some great videos that get sort of re-released off the back of it. The impact he's had, like you say, almost no doubt our best ever batsman. So yeah, leaves a massive hole. But as you said, certainly I almost have no doubt that he's timed this to his perfection to make sure he can do it with as little fanfare as possible, which is just exactly how he did things. There's never too many celebrations there, and you just had no doubt that it was always about the team. And man, what else could you say that's better for a player of any team sport, that they truly seem to not really care about themselves, did it because they wanted the team to win. And I'm glad he got the ultimate reward at least once, which was winning the World Test Championship in the Mace. What was that, 2021 or something? Just great that he at least had some big accolade to go down on. But yeah, the numbers are all there. What a guy. But yeah, good call, mate. Good call.
Yeah, I mean, that's one of my favourite sporting memories was very early morning. It might have been sort of 4 or 5 in the morning, was it? I remember having to get up and sort of sit and wait till the end. It was pretty tense there, and then Kane Williamson and Ross Taylor at the end. That's a great sporting memory where we're in it, and it's sort of I don't know, maybe slightly paid back for 2019, but it certainly was a goodie anyway.
Yeah. There's certainly an enduring memory of. I think there's a great photo of the two of them embracing, and showing some great emotion after winning that one. And yeah, I agree. I think if we had the opportunity, we'd take the Test Championship over the World Cup in 2019, but we should still had both. So
Yeah.
but look, we're not going there. We're not going there. But yeah, no, good call, mate. And otherwise, yeah, obviously it was an excellent few days over in Melbourne with the broader team. Yeah, we were lucky enough to be able to. Our flight was delayed Friday night, of course, getting back to New Zealand. Which the only blessing was that we got to actually catch the Chiefs Crusaders game in full. Otherwise, we might have been in the air for most of that. So we'll take that as a little bonus. But yeah, definitely a good few days. Great. We've got some new team members that just started in the last 6 months or so. So great to meet them in person, and just the usual, right? Just really energized to keep bringing those useful insights to market. The rest of the business just presenting to us and having those conversations. How the strategy is going for the broader business and where we fit in, and everyone's really thankful for the broader work of the research team. So nice to feel valued, and as I said, energized to keep doing what we do and see what we can steal from the Aussies in terms of some cool data points they've got, some cool reports, and I'm sure people will see and note some of the changes in the next year until we do it all again. But certainly to say we're not going anywhere, and things are going great, and we both love what we do, and those moments help as well. So yep, good times, mate. Happy as Larry, eh?
Yeah, for sure. Yeah, it was a great trip, and yes, it's work, yes, it's strategy, and hearing about different parts of the business, but also the socialising side of things. Meeting the new team members, and yeah, some good. I mean, Melbourne, there was some good venues, great food, great beverages. So yeah, it's perfect.
Yeah, no, yeah, great point. Melbourne, great town to visit, great food. Yeah, couldn't speak more highly of it. So, no, we will leave it there though, mate. We better move on with our days. Slightly later record for us today, so plenty to get into. But thanks as per usual for your thoughts and insights, Kelvin. Always appreciate that. Just want to say thanks very much for listening. Please do get in touch with any questions or feedback you've got. Always keen to hear from you. That'll do us for today. My name is Nick. He's Kelvin. You've been listening to the New Zealand Property Market Podcast. Mā te wā.